In our Eye on Emerging Markets, we are speaking to an emerging markets pioneer. Mark Mobius started his career back in 1967 as a market researcher for Monsanto. Since then, he has been globe-trotting and investing in countries like Russia, China, Brazil, India, and Africa. He is now the executive chairman of the Templeton Emerging Markets Group, overseeing more than $50 billion in assets. And for the next half hour, we will speak to him about where he is seeing the best investment opportunities. We have you. You're captive of us. Thanks so much for joining us, Mark. We're really pleased to have you on the show. I know we're going to talk about Brazil because that's a big investment of yours. But just before we get there, let's just speak very broadly. Over the last few months, we have seen a real turnaround between the emerging markets and, say, the developed nations, at least from an investor's perspective. Sort of that flight to quality as events unfold in the Middle East and North Africa. What is your take on these recent events, and how is that changing your investment thesis, if it is?
Well, the interesting thing that's happened is that despite the problems in the Middle East, what's happening in Egypt, in the other countries there, the flows of funds into emerging markets continues at a pretty high rate. I think perhaps some of the ETFs and the index funds experience outflows, but otherwise there's been a net inflow, and that's quite surprising and tells you something about the risk appetite out there. With the amounts of money that has been pumped into the system, there's still a lot of appetite for risk.
Mark, you have been a fan of Brazil, very bullish, yet the Brazilian equities have underperformed relative to other emerging markets country. What is your stance right now in the country?
We are still very bullish on Brazil. Of course, in the short term, you're going to see underperformance in any market. It could be any good market will underperform at one point or another. But if you look at the longer term, Brazil has done very, very well. And one of the reasons why Brazil has done well with our portfolios is that price appreciation has pushed up the percent weighting in Brazil. But if you look at Brazil, they have everything going for them. They've got the natural resources, both in terms of mineral resources and food resources. They're the biggest depository of water in the world. They've got a very vibrant consumer economy. So we can get almost anything we want in Brazil in terms of the two big sectors that we like, and that is commodities and consumers.
Are you worried at all, though, that food prices, rising energy prices, which may be a double-edged sword for a country like Brazil, are you worried, though, that that will slow down or tame the local consumer demand there?
I'm worried about it globally. From a global viewpoint, higher food prices combined with high unemployment is a very explosive situation. If you add those two together, it's the so-called misery index. And one of the things we saw in the Middle East, by the way, before this blow-up, was the misery index rising in those countries. So we have to keep an eye on that. I don't think Brazil is going to be any different from any other country in that regard.
You don't think they are higher on the misery? I'm sorry, Mark. You don't think they're higher on that misery index scale, especially when you throw in just overall, when we look at inflation, that's a big concern in that country?
Yes, inflation is a concern not only in Brazil but other countries. The good news is that Brazilians are very aware of inflation, given their history with hyperinflation in the early 90s. So the central bank has been clamping down very forcefully with higher interest rates and other measures. That's one thing. On the other side, unemployment has been going down. The Brazilian economy has been so vibrant, they've been mopping up a lot of these unemployed people and putting them to work. So the equation is not so bad if you add those two together with unemployment coming down.
Our focus now, we just spoke about Brazil. We're going to speak about China. China's stocks, Mark, at a 4-month high in hopes that the government is going to introduce some policies to boost housing over there and spur domestic spending. Now, you haven't been that bullish on the property sector in China specifically.
That's right. We think it's overbought and prices are a little bit too high. The property companies will be struggling going forward to really produce the profits that we'd like to see. So I think it's not quite time to be in the property sector.
What do you think about the government's attempts now to rein in inflation? We talked about this with Brazil, but it seems to be a bigger issue in China.
Yes, of course, they are very concerned because, again, food prices is a big concern, and inflation generally. What they've been doing is pinpointing various actions with the banks. They're telling the banks to lower their lending, particularly in the property area. They are focusing on infrastructure development so they can keep on the economy moving at a high pace, but not having too much leakage into the general economy. It's a very difficult task, as you can imagine, because they want to have 7–8% growth, but on the other hand, they don't want to have the inflation that more money is going to create. And of course, as you know, money supply has been increasing at a rapid pace in China. So it's a combination of measures. The appreciation of the renminbi, the Chinese currency, of course helps, because imported raw materials then become cheaper in local currency terms. And of course, as you know, the Chinese have been on the prowl globally for natural resources, so they have reserves of various products such as copper, iron ore, and so forth.
Mark, you spend a lot of time on the road traveling, and I know you actually do a lot of the sort of the groundwork for your investment thesis by actually being in these countries. How has China changed in the decades that you've been traveling there?
Oh, it's amazing. The changes have been incredible. Just to give you one example, 10 years ago when I went to Beijing, I could cycle all over the city, and everybody else was on bicycles. Now, there are very few cyclists. Everybody's driving, and of course, you have these incredible traffic jams. But that's just one example.
There seems to be a widening class divide. We often talk about luxury items and the demand coming out of China. But what about the basic consumers, sort of the middle class in that country?
Well, there's no question that there are a lot of poor people still in China, particularly in the rural areas. The good news is that the water level is rising for everybody. In other words, yes, there's some very, very wealthy people, but they are also bringing up the middle class and the lower income groups. The Chinese government, of course, is very concerned about this, the evenness of the distribution of wealth, and they're focusing more and more on that.
Okay. Mark, one quick question following up on China. Human rights issues, are those fears overblown by people?
Yes, I think to a great degree, because at the end of the day, people are interested in food and housing. They want to know what is happening to their private life. And they want fair treatment, and they want the rule of law. Those are the basics. And to the extent that the Chinese government can meet those requirements, they will be in pretty good shape.
And you think that's happening in China? That the government is
yes, definitely. Yeah, of course, you have corruption endemic in many places in China, but that's not new. It's all over the world. The question is the Chinese government moving ahead to try to remedy the corruption issue? And they definitely are moving against that. So I think they are making a lot of progress.
Mark, let's turn now. Let's talk natural resources, but we have to talk about oil. This has been an ongoing story, obviously, since really the end of January when we saw events erupt in Egypt. You and I had a chance to speak to her during the break. It came as a surprise to you, but now that we've seen these events unfold, where do you expect oil to go?
I think the trend is up. I'm not predicting any particular level, but there's no question, and we've been saying this for the last 3 years, which is why we have very heavy weightings in the oil sector, because we think oil prices will continue to trend upwards. Of course, there'll be lots of volatility. One day it'll come down, the next day it'll go up. But if you look at the long-term trend, it's definitely up.
And what does this do for the investments that you have across that region, the Middle East through North Africa?
Well, of course, those companies that have exposure to the oil sector in exploration and production should do fairly well. A lot depends, of course, on government taxes, which have to be watched very carefully.
Mark, copper prices, moving on to a different commodity, copper prices got a boost earlier today from the U.S. jobs report. What is your view on copper?
Again, the trend is definitely up. It may have overshot a little bit recently, But I think over the longer term, copper prices are up. So companies in the copper sector, particularly here in Latin America, by the way, will do very well.
And then just wrapping up, we have about 50 seconds here. Just tell us overall, in terms of your investment thesis, has anything changed? You have a very long-term view on your blog going out to 2020, but in the short term, are you changing any of your investments as a result of the events in Middle East and North Africa?
We haven't changed anything in terms of where we are, and it's mainly in the resources sector and commodities and consumer. We're interested in the emerging market consumer. What's happened in the Middle East will, to some degree, accelerate some developments, which I think, on balance, will be positive. Because what the Middle East situation has done is put a lot of countries on warning that they've got to reform, they've got to change the way they're doing business. And that can only be good for capital markets.
All right, Mark, thank you so much for joining us today. That was Mark Mobius, Executive Chairman of Templeton Emerging Markets Group, joining us live today from our newsroom in Mexico City. Okay.